Hello guys and welcome to Cryptocurrencies, here to help you make the best decisions in cryptocurrency and in cryptocurrency technical analysis. Today's stock market video, we are going to be talking about why is the market going to crash this year? What is the evidence that differentiates me from the rest of the market crash predictions? How low can the market crash go? And am I a secret billionaire? Stay tuned in today's stock market technical analysis YouTube video to find out why is the market crash going to just plummet during this year to next year. So let's get started, guys. So first, guys, I want to say that personally I believe in, not by opinion only, but based on pure facts. Right now, in today's video, I'm going to be talking about how is the market crash going to crash. So right now, guys, to get started, the reason why the market crash is going to crash this year is because of something called the Shmita. The Shmita is a Jewish holiday, or it's a specific tradition they do over there. So here on the blockchain today, this has a very good summary of what is the Shmita year. So first, you can see that here the story behind the Shmita is that the 7 years is year of resting and releasing, not planting nor harvesting any crops, so the soil can recover from 6 years of growing and harvesting. The year also stands for debt forgiveness and to break debt cycles. So what makes this Shmita cycle so interesting is, well, if we compare the Shmita years with the financial markets, we can see a very interesting correlation. Major important crashes in the stock market are correlated with the Shmita years. Let's have a look of a couple of examples of stock market crashes which fell all in the Shmita years. You can see that here, 1916 to 1917, you have the stock market drops. 40% in many European countries are suffering an economic collapse. 1930 to 1931, the Great Depression, the worst financial crisis in human history. 1937 to 1938, global recession. The 1979 to 1980, global recession. 1993, 1994, bond markets crash. So you can see here, guys, that during these Shmita years, there's some kind of big problem in regards of some specific big market in the whole world. So almost every 7 years, in summary, you see a market crash in almost every single sector in the world, because right now the Shmita year is the 7-year cycle. So that 7 comes to the Jews, the Israel. That's where most of the money is really controlling this world. And that's why you see this 7-year cycle has its effects. And you can clearly see it when I'm going to show you this chart right here. So right now, guys, when you see the pullbacks that the Shmita causes in the markets, you can see right here. So these red lines right here are marked as an indication which marks the specific 7-year cycle. So right now we're in a 7-year cycle, guys. So that's why you are seeing this uncertainty and pullbacks in the market very drastically, like you can see right here. So first, let's start over here. So this was around the 2015 to 2016, and you can see that the stock market crash here in the S&P 500, this is the monthly time frame, guys. So when you see a monthly pullback like this, is very harsh. Like, it's very harsh, especially in the stock markets, because in the stock market usually you don't see that type so much volatility. Usually you see that in the cryptocurrency markets, because the stock market is already a matured market, so it has a lot of money. The more money a market has, the harder it is to move it. So first, you can see that right here, there's a 14% pullback here using the Shmita year. Here on the 2007 to 2008, you can see that from September September 7, from September 2007 to September 2008, you can see a freaking market crash over there. That's the housing crisis that happened during that 7-year cycle. The next one, before this one, you can see right here, is the 2000 to 2001 market crash, the dot-com bubble. You can see a boom, pullback. Like here in the 2008 crisis, you can see a 57% pullback. 57% pullback. And right here in the dot-com bubble from September of 2000 to September to 2001, huge pullback to the dot-com bubble, 50% pullback. That's insane. That's very, very harsh. Like when you're talking about stock market, that's very harsh. If you're talking cryptocurrency, that's not that much. That's kind of expected in a more fast-paced time frame compared to the S&P 500. So right here, but you can see in this instance, in the September 1994 to September 1995, you can see a 22% gain in the Shmita year. So you have this exception. This is one right here, but before that, you can see the September 1987 to September 1988, another pullback, a 35% pullback again. And also, guys, here, this September 1980 to September 1991 September 1980 to September 1981, 27% pullback there. Here again, this was harsh. Look at this, guys. Here, look at that. So here is the other Shmita, the September 1973 to September 1974, a 50% pullback. And you can see right here, boom, like that. Like, guys, that's a lot. Wow. Here, guys, also in the September 1964 to September 1965, 23% pullback, and so on, guys. You can see it. And right here you have these two exceptions, and the reason why I say two exceptions, because by this time frames the gold standard was still in play in the dollar, but after the gold standard, you can see that this amount of pullbacks are just very harsh after that, after removing the gold as the backup of the dollar itself. So you can see right here, from this September 1950 to September 1951, you have a 30% gain right there. From September 1957 to September 1958, you can see a 55% increase. After the gold standard has been eliminated from the US dollar, in the Shmita years, you can see 24% pullback, 50% pullback, 28% pullback, 35% pullback, exception, this 22% gain. And then the dot-com bubble, exactly timing this dot-com bubble, Shmita time, boom, 49% pullback again, and boom, 57% pullback again, and 14%. And right now, guys, you can see that right now the stock market has already pulled back from the previous all-time highs to here around a 14% for the moment. So how low can this pullback really go? So right now, in order to determine how low can it go, first you can see that after determining the specific Shmita years, I'm going to show you something also that's very interesting. So even in the numerology, which is also a secret language used by elites, that they usually use this to determine and to plan most of its events. So this is a really profound subject. Well, I'm just gonna have a summary of this right here. So for example, Shmita is spelled out like this. This is the Shmita. You can see that 7-year cycle is 70. Numerology, you can ignore the 0 and you can count it as a 7 when you have zeros at the same time. And when you look at Shmita, you have the 7-year cycle. That's very interesting. And so at the same time, the other term you have for Shmita is like the following, Shmita, like this. And so what's very interesting about this is usually when you have different words. Also, you can support my YouTube channel by clicking the Patreon link in the description below, where you can get an elite VIP crypto investor membership, where you get an immediate short-term buying opportunities, immediate short-term selling opportunities for Bitcoin, Ethereum, XRP, Cardano, Chainlink, and cryptocurrencies of your choice. Also, you get technical analysis updates for Bitcoin, Ethereum, XRP, Cardano, Chainlink, and potential cryptocurrencies of your choice 5 days a week. Complete overview of the cryptocurrency market 2 times per week. Start of the week and end of the week. Elite VIP crypto investors Discord group chat. Live updates where I tell you my buying targets and my selling targets immediately when I do them in the exact moment. And you get to see when I buy and when I sell cryptocurrencies in live time. Live weekly long-term cryptocurrency price updates, which is and podcast where I complete an overview of the cryptocurrency markets. And also I will tell you with a high certainty the Bitcoin tops and Bitcoin bottoms with certainty during Bitcoin cycles and in the long term. So if you are interested in regards of having a person who can lead you to the correct cryptocurrency path with a high certainty, then you can click in the Patreon link in the description below, where you can get a 10% discount when starting out this month. And at the same time, you get access to my complete overview of the cryptocurrency market. And also I can teach you how to navigate with this market so you can have an edge at the cryptocurrency market as time passes. And at the same time, you get to learn how to look at the cryptocurrency market with a professional overview. Summary: the more connections it has, the more it is likely that it was already pre-planned and put out there on purpose for the words itself to connect to the specific words that are very similar or are synonyms. So right here you have Shmita here, had the 38 and the Shmita again at 38. That wasn't an accident. And the Shmita, which is the 7-year cycle, you have that 70. So that's very intentional. Those are elite and name propagandas. Those are the ways they communicate and show you the truth using this language. But in summary, I'm just gonna keep it like that because it's a lot of things about that. But right now, that's one of the ways. Also at the same time, guys. So guys, right here, guys, I wanna show you how low can the Shmita cause a market crash? How low can it go? So right now, guys, this arrow, so you see right here, determines the times it had a bearish divergence, and the MACD also having that negative crossover right there. So not the negative crossover in the MACD, but the bearish divergence combined with the negative MACD. So you can see right here that when you have this bearish divergence, what's a bearish divergence? It is when you have higher highs in the price action, and when you look at this indicator, which is the yellow indication right there, then you see lower highs on the price action. See here, lower highs right there and higher highs. That's a bearish divergence. And when that happens, usually you see how much of a percentage pullback. This will be a 20% there, right there. Here, another bearish divergence happened right there. You can see higher highs in the price action right there, lower highs in the RSI, and boom, another pullback. This was the C dump incident right there. So that was around, let's see, from here to here, that's around 35% pullback. Here, guys, let's see. I'm gonna look for the arrows so you can see the bearish divergence. Here was the Shmita combined with the bearish divergence in the monthly time frame, and at the same time you can see here, let's see, higher highs right here, and you can see in the RSI it was trading lower while the price was trading higher, and combined with the Shmita and the negative MACD in the monthly time frame, you can see a 50% pullback right there. So you can see it. Lower continuation in the RSI, higher highs in the price action. Bullish, a bearish divergence combined with Shmita, 50% pullback right here, 20%, 35%. So they're big. They're big. Right here, let's see the other arrow right here. This was another bearish divergence right there. You can see here higher highs right here. Look at that, and lower highs in the RSI. You can see it right there. Lower highs, higher highs, and boom, pullback 35% when you have the bearish divergence combined with this Shmita, which is the red zone right there. And at the same time, let's see the other, when you have a bearish divergence combined with Shmita, boom, 23%, higher highs in the price, lower highs in the RSI. It's not failing, guys. It's very consistent right there. Higher highs from here, and boom, higher highs there, lower highs in the RSI. So it's very consistent, guys. The bearish divergence right there, this was a, let's see, this was around 29%. It's very consistent, guys. So yeah, when you have a bearish divergence combined with a Shmita red zone cycle, then you will see a minimum of 20% pullback. That's the minimum. But right now, guys, the thing that's not good about this Shmita year is because the thing is, right now, this is not very good because you can see this vertical price action because of the Federal Reserve just printing. Like, this is a very unique situation we have right here, guys, because right here, guys, this is not any ordinary Shmita. This is the 7th time of the 7-year cycle. Like the 7-7, that makes it worse for the pullbacks. And the last time that happened was from here. Let's see, 1 here, 2 here, 3, 4, 5, 6, 7, and then again reset 1. This was the last time the 7-year Shmita cycle was commenced and was over those times. This was the 7th time of the 7-year cycle. And that was a 50% pullback. That was very harsh, right? Like that. So here, if the Shmita were to cause that type of pullback, then you will see the S&P 500 pulling back 50% from its all-time highs. From here, it will pull back all the way up down to, let's see, this around here. And wow, look at that. Comes to the 2400. Oh my gosh, that's another like very strong connection, because the Jesuits are the ones who usually run this market and the whole economy. So that 24 has big ties with that, and you can just, that's another subject. But right now, guys, usually when you see that 24, that's the representation of the elites. Usually in the stock markets and in big companies, you see manipulation in regards of those numbers. When you see, for example, if you see in the Facebook chart that it's pulling back, and you see that it's pulling back from 400 to 240, has support and then bounces, that was intentional. But just to keep it like that, because it's just, that's another big subject. I'm just here telling you about the S&P 500 pullback. So right here, guys, so you can see a 50% pullback would take you to the $2,400 area, which will make a lot of sense because you have this massive pullbacks. You have this massive vertical price action, and this has to have a cool off right there, because you can see even the RSI, it's bearish divergence right there. Higher highs in the price, lower highs in the RSI. So minimum, you will see that, like, using the probabilities, you will see minimum a 20% pullback. So that would be from here to here. Okay, that will be around the $3,800 area, but still I believe there is much more to come. So usually when you see the Shmita, and even after the red zone, you will usually typically see more continuation to the downside for around 2 to 4 months, from 2 to 4 months more. You can see right there, end of the Shmita, continuation to the downside. End of the Shmita right here, continuation to the downside. And the same here, and just, it's very consistent because even the same definition has it like that. And why does it start on September? Because the calendar in which United States uses is the incorrect one, because you even see it on the pronunciation itself. Like for example, September is for 7, and October if it's for a octagonal, like 8 sides. You also have the octagon, 8 sides. The 9, November, the 9, and the December in the Spanish version is 10, which is 10. And that's what it's very intentional. It is done by that because the United States, most of the big movements, the big money, the big famous things are mostly influenced by to specific traditions like this, like the Shmita year and the Hebrew holidays and in summary, most of the United States holidays and specific big events, all from big money to very famous things, all comes back to Hebrew holidays and numerology. Just, it is like that. I can show you how it works also, but I don't want to include that for the moment in this video because it's just, it will make it far longer, and I think that's a different subject for a different video. So, but it's very consistent. So once you know what to look for. So, but right here, guys, using the S&P 500, that's what I'm seeing right here. The minimum would be the 20%, but still, we can see right here something very interesting. Using the simple moving averages in the monthly time frame, you can see right here, guys. This is a very profound indicator I'm going to show you. I'm going to share with you guys right here. So this indicator will show you, without fail, for the moment, the lowest the stock market can go, literally, because it hasn't failed. You know why? I'm gonna show you. This red line, this is the 333 simple moving average in the monthly time frame. Okay, almost every single time the stock market has gone to this level right there, it has marked the literal bottom of the market crashes, all coming all the way back from 1950s. So right here you can see, I'm gonna show you guys. So here, guys, and another thing, usually the S&P 500 almost never goes to that 333 simple moving average in the monthly time frame. Like that's all. Yeah, that's very rare. Okay, it has only touched that line 2 times. This last time this line was touched was around the market crash, around this 2008 house market crisis, market crash right there. This was on March of 2009. It touched the 333 simple moving average in the monthly time frame in the S&P 500, and boom, it literally marked the bottom to that market crash. And you can see right there, boom. Wait, come on, there. Why is it there and there? Dang it. And so again, guys, here, it almost never touches that red line. It's very rare. Okay, if you ever see the S&P 500 touching that red simple moving average, which is the 333 simple moving average in this monthly time frame in the S&P 500, that's a very good buying signal. Not financial advice, okay? But right here, and then before the 2009 market crash, before the March 2009, this was the other time in which the S&P 500 touched this 333 simple moving average in the monthly time frame right there. This was around 1974 on September. Look at that, boom, beautiful. And then continuation to the upside, like literally, like after that, it's just blast off time to the upside. Just look at that, exactly there, boom. And again, those were the only two times right now in which this S&P 500 has touched that line using the S&P 500 price on the monthly time frame, using the simple moving average, which is a 333 simple moving average in the monthly time frame. That's a very good indicator. So you're welcome, guys. I can charge for that literally, but it's okay, guys. I'm going to just share with you guys because it's awesome to just know these things and just to be prepared if that happens. So yeah, and yeah, guys, right now you can see that here the 333 simple moving average in the monthly time frame here in the S&P 500 is all the way down on the $1,600 area. And yes, that's how low I think the stock market, the S&P 500 can go. The lowest. I'm not saying that that's going to happen, but that's the lowest it can go for the moment. That would be the lowest there. That's the price. That's $1,600 level. Okay, $1,600 is the lowest I see the S&P 500 going in this stock market crash that's mostly going to occur during this year to next year. Okay, that's the lowest, but that doesn't mean that's the doesn't mean that's the most likely scenario. That would be the lowest, but not the most likely, which is different. Like that would be the lowest. Another thing I want to show you guys. So usually here, this is the 8 simple moving average in the monthly time frame. This is the yellow simple moving average in the monthly time frame using the S&P 500. This light blue is the 21 simple moving average in the monthly time frame from the S&P 500. Usually, if the S&P 500 is going to lose that simple moving average, that 21 simple moving average in the monthly time frame, which is all the way down around that $4,064 level. If that loses support, then the market crash will be all the way down from here, from top to here. That will be at 30%, which is normal. That's usually the market crashes you typically see around to 20 to 50% pullback. That's what you typically see in stock market crashes, and especially during Shmita years. And if it's going to replicate the same thing that happened before, which is this is not any ordinary 7-year cycle. Like this is the 7th cycle in the 7th year cycle, like 7-7. The minimum, the last time that occurred, it was a 50%. So that will be all the way down right here, around this $2,400 level. And so that will not be weird at all. Okay, so right now the average you can see right here in the pullbacks will be from 25% to 40%. That would be the average from there. Like 25 to 30%, that would be the average pullback using the stock market, the S&P 500. So that's very important. And the same, guys, if like I show you guys, if this 21 simple moving average loses support, that would be horrible for the market crash, which is expected. And right here, so this was one instance where it just lost support right there, but waked up and continues to the upside. And so, but usually when you see that 21 simple moving average losing support, it's just boom, continuation to the downside to at least this dark blue simple moving average, which is a 50 simple moving average, and the purple simple moving average, which is the 55 simple moving average. Here, lost support, continuation to the downside right here, and then boom, like this, here, lost support, but this was a fake out continuation. Here, lost support, boom, touched this dark blue. Again, lost support right here, touched the dark blue. Let's see. Again, lost the support right there, touched the dark blue. It's very consistent, guys. So right now, guys, those are the things I'm seeing right now in the S&P 500 still. Personally, how much of a pullback this can be, let's see. So using Fibonacci retracements from this swing low, from the C dump to this swing high, like it will make a lot of sense if this would happen, like go all the way down to this golden pocket around this 0.618 Fibonacci retracement, around the $3,194 level to the 0.65 Fibonacci retracement around the $3,110 level. That would be a very good buying opportunity over here. Okay, I'm not saying it's going to go over there, but that would be a very good opportunity if it's going to occur. Okay, personally, seeing the things this 7-year cycle is just bringing on right now, this is a very different scenario, because first, guys, you see that this is the 7-year, this is the 7th time of the 7-year cycle, right here, 7-7, the 7-year cycle. And also you have at the same time the specific just Federal Reserve out of chaos situations, because the last 2 years the US has printed more than almost 50% of its whole US dollar supply that goes back for more than 100 years, and just prints almost more than 50% of that whole US dollar supply in just less than a year. That's not good, okay? And when you have also this 7th time of the 7-year cycle, the Shmita, this massive uptrend, this was artificial, this wasn't real growth. That's another thing. A lot of money printing. You see the bearish divergence in the monthly time frame, which is not good. And also you are seeing this MACD in the monthly time frame it's starting to be in the negative side right now. Those are not very good indications, guys. Like personally, okay, this is not financial advice, but in my opinion, I think that this Shmita year will definitely be a very not good year in the economic sense, like a very not just horrible. Like even here, like if you search for reset, like market reset, you can see the 22. That's and today and this year is the 2022, and you also have that 2022, which you can ignore the 0 and you sum up 2 plus 2 plus 2, which is 6. And usually when you have a lot of sits and 13, 33 numbers like that, especially in the year, you can expect immediate reactions to those numbers. Okay, so reset and even the 2, like you see, it sits. It's not good. It's not good, guys. And right here, guys, even the Dow Jones, you can see here that it has also suffered the pullbacks during those years. I'm gonna show you here. This is the Dow Jones in a monthly time frame. You can see the pullbacks, like they're very clear. It's on its way. This was from here to here. There, 16% pullback, 54% pullback, 35% pullback. This was a 59% increase, 40% pullback, 25% pullback, 42% pullback, 26% pullback. Just, it's there, guys, it's there. This was the 63% gain, 32% gains. But I personally, I don't count those as much because the dollar has changed a lot since then. These two Shmita years, these two Shmita cycles were in a time where the dollar was backed by the gold standard. But right now, from this Shmita to the following in today's Shmita year, those are not, though that dollar is not the same because that dollar is not backed up by the gold standard. And you can see that since the dollar has lost the gold standard, the pullbacks has been harsher. 26% pullback, 42% pullback, 25% pullback, 40% pullback. This was the exception. 59% gain, 35% pullback, 54% pullback, 16% pullback. Right now, from this previous high to here, 12% pullback for the meantime for the Dow Jones for the moment. And yeah, guys, personally, I will be expecting, this is my opinion, I will be expecting to at least go to this level, to this $3,500 level. That would be my personal minimum. Okay, but using the probabilities, the minimum will be the 20% pullback, and then that will just be in the hands of the market. But usually, since we have the probabilities, I can say with a high certainty that most likely 20% will not be it. And adding the circumstances I already show you guys in the economic scenario in the whole world, this is like, look at this vertical price action. It's just too this has to at least go like this, boom, and then go like this if it wants to go in a healthy manner, like the following. So personally, I will be expecting this 0.5 Fibonacci trace around the $3,504 level for that pullback to most likely end. Okay, that's what I'm expecting, like this, maybe like this, boom, and just boom, like this. And that will just take the S&P 500 price and have a pullback all the way down here, around 27% pullback. That's what I'm anticipating, 27% pullback right there. And remember, okay, if it's even worse than it can be anticipated, kind of, then expect for it to go all the way down here. That's the worst case scenario, all the way down to this 333 simple moving average in the monthly time frame. Okay, doesn't have a very high likely scenario to occur, but it's not impossible. Okay, if this simple moving averages just doesn't hold this price, next will be all the way down here, the $2,771 area right there, $2,731 level. If this simple moving averages are not going to hold, which is in the monthly time frame, those are very strong supports. The 50, this dark blue is the 50 simple moving average in the monthly time frame. This purple line is the 55 simple moving average in the monthly time frame. If those doesn't hold support, expect strong support around this Fibonacci retracement on the golden pocket from here to from $3,101 level, $3,111 level right there, and the $3,192 level. Those will be very strong supports. If that doesn't hold, it will go all the way down right here. This $2,700 level, this $2,771 level. And if that doesn't hold support, that's very bad. Just next will be all the way down to $2,028 level, and the lowest, like I show you guys, will be $1,600 level, $1,600 level. That will be the lowest in my opinion. And from, not my opinion also, but from the probability standpoint, that would be the lowest historically. So yeah, guys, remember, this will not be weird to come all the way down here. That's what I'm expecting, the $3,504 level, and to hold there. Okay, so that's what I'm seeing right now using the S&P 500, guys. So yeah, guys, we have very clear that this is most likely going to have a pullback, especially with this high vertical price action. Like, this has to have a hold down. Like I show you guys, just be prepared. Mostly it will occur from September to December. Those will be most likely the dates in which the hard impacts in the economy will occur. And expect, when you see these massive pullbacks, you will usually see a fake news scenario. Like, almost every single time there is a world event that happens during these times, because that is the illusion, that's the lie in which these top elite players want you to believe that it's occurring. It can be a World War III, it can be many different things, even the water running out for weeks. It can be the power turning off for 1 to 2 weeks, the whole internet turning off for 1 to 2 weeks. It's just usually the harsher the pullback, the more big the scenario will be, the bigger the news will be. And usually, why do they do that? Because they don't want you to mostly blame the government for those specific actions, because the government is involved with this, and also at the same time many billionaires and millionaires are involved with this, because they don't want you to lose faith in the dollar. The US dollar doesn't have any value itself. It just has value because many people believe it has value, but it truly doesn't have any intrinsic value. But if you see these pullbacks, mostly caused because of these governments and this irresponsibility of the Federal Reserve and the billionaires, millionaires, and I'm not saying all billionaires and millionaires, but most of them are the cause for this, because of their bad management with the money, and at the same time they don't want to be accused for their bad behavior. So they just create a very big scenario, a big theater for you to be convinced that because of that theater, that big event, that was the reason for the pullback. But most of the times that wasn't the reason. That pullback was going to come anyways, okay? But they just very, very conveniently just time the news with a specific price pullback in order for you to believe that the pullback was caused because of the event and not because of the governments. Because if a lot of people saw that these pullbacks are caused because of the government and the most billionaires and most governments in the world, they will lose trust in the dollar, in the US dollar. And if they lose trust in the dollar, almost the whole economy in the United States will collapse. And most economies in the world depend on the US economy. So that's why they have a very big incentive to just lie to you and pretend to just tell you that, okay, these pullbacks were caused because of these specific scenarios, which are not true. They make it very, very truthful. They make it very realistic, but it is mostly theater. The same happened with the 2001 scenario. That was staged. The 2008 house market crisis. That was going to happen anyways. And very big events usually lead to pullbacks because those times are also combined with the Shmita years. By coincidence? No, it's not. So yeah, guys, that's what I'm seeing right now in the S&P 500. Like I show you guys. If you enjoy this YouTube video, guys, I would really appreciate it if you can leave a like, comment, and share this YouTube video with your friends, guys, because this will be, in my opinion, potentially the best buying opportunity in the whole economic history it has. That is my opinion, okay? Because mostly this will have a minimum a 25% to 30% pullback, and so And the minimum using the probabilities will be 20%, but in my opinion, my standards will be around 25% to 50% pullback. That's what I'm anticipating right there, 27% from here, and then continue to the upside. Okay, so yeah, guys, if you really enjoyed this video, like I said, like this video, comment, and share this YouTube video with your friends. Like send them this information, because this is information this information most people don't know about it. Like, this is what usually billionaires, millionaires, governments, and top elite players in the economic stage play to win and to buy the dip and then sell the top. Get it? Did you get it? Buy the dip, sell the top. In the Shmita years, that's how it works. Shmita year, in summary, is a buying opportunity for most wealthy people who know about this stuff, which they do, most of them. And yeah, that, guys. And also, I'm not a billionaire. I'm just stating the specific information I find out using different methods. One of them was using Waters Above Crypto. He's a very knowledgeable cryptocurrency technical analysis, and also as a person who knows about different things in regards of the about the numerology, specific conscience, and he knows a lot about life, in summary. So yeah, shout out to Waters Above Crypto. He knows a lot, and that's where I really get to know about this Shmita thing. But it's very consistent. If you search it, it's going to be there. Like, the graphs showed it. So yeah, guys. Also, guys, thank you so much for watching this YouTube video, guys. Again, thank you so much for watching this YouTube video, guys. Share it with your friends. Share it with your families. Like, show this very, very important information to the people who invest, because it's just this year to next year will be most likely very horrible in the economic sense. And if the economic sense is very horrible, you will see usually big bad events to just convince a lot of people, but to lie to a lot of people. That's what I do. But yeah, guys, have a nice day, guys. Like, I really appreciate it for if you watch this whole video, and still I really appreciate it for just clicking in this video. Also, you can support my YouTube channel by clicking the Patreon link in the description below, where you can get an elite VIP crypto investor membership, where you get an immediate short-term buying opportunities, immediate short-term selling opportunities for Bitcoin, Ethereum, XRP, Cardano, Chainlink, and cryptocurrencies of your choice. Also, you get technical analysis updates for Bitcoin, Ethereum, XRP, Cardano, Chainlink, and potential cryptocurrencies of your choice 5 days a week. Complete overview of the cryptocurrency market 2 times per week. Start of the week and end of the week. Elite VIP Crypto Investor Discord group chat. Live updates where I tell you my buying targets and my selling targets immediately when I do them in the exact moment. And you get to see when I buy and when I sell cryptocurrencies in live time. Live weekly long-term cryptocurrency price updates, which is and podcast where I complete an overview of the cryptocurrency markets. And also, I will tell you with a high certainty the Bitcoin tops and Bitcoin bottoms with certainty during Bitcoin cycles and in the long term. So if you are interested in regards of having a person who can lead you to the correct cryptocurrency path with a high certainty, then you can click in the Patreon link in the description below, where you can get a 10% discount when starting out this month. And at the same time, you get access to my complete overview of the cryptocurrency market. And also, I can teach you how to navigate with this market so you can have an edge at the cryptocurrency market as time passes. And at the same time, you get to learn how to look at the cryptocurrency market with a professional overview. Thank you so much for watching this YouTube video, guys. Have a nice day, guys. Take care, guys, and peace out, guys.